Volatility returned to the markets over the past couple of weeks, and now we're sitting back at or touching all-time highs. It's got to be frustrating for investors who are emotional with their decision-making process. Tell me, Adam, how do you look at the volatility we've experienced the past couple of weeks?
Yeah, I mean, I look at it and I think there's probably more coming. And if you were scrambling to buy, insurance via the options market on your portfolios when the market was cratering for those few days, a week or 10 days ago, you should be buying it now, right? Buy it when volatility is a little, when the excuse me, when the VIX is a little lower, so option prices are a little more reasonable. When there's not a cloud in the sky, because when volatility spikes like that, it doesn't. With everything going on in the world, with the situation in the Middle East, with the situation in Eastern Europe, with the U.S. presidential election, that's a very, very close race. There are a lot of things and a lot of headline risks that can spike volatility. So if we're in this brief moment where we had this spike and now it's settled down a bit, now's the time to buy your fire insurance when your house isn't on fire.
Austin?
Yeah, I think that the market seems to be a bit more on the side of fear than on greed right now. So if basically investors are looking for things that could be wrong with the market, and that doesn't mean that it's going to go straight down, but it means that whenever there's a slight shot, or whenever there's a slight issue, it turns into a much bigger issue in the market, because people are fearing that it's going to turn into the worst. We're seeing a lot of movement in macro data, which I think is preventing the market from being as calm as it has been historically. And the rate change in Japan is a good indicator, where they, for the first time in a long time, started increasing rates, and all of a sudden there was this unraveling that nobody saw coming. It wouldn't be surprising to have more of that as we see the Fed going from, raising rates to holding rates high to all of a sudden they're going to be reducing rates. There's likely going to be some casualties to that move. It's unknown where they're going to be right now, but it likely leads to more volatility going forward.